the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares inched higher today as investors continue to mount the global interest rate outlook. So the Straits Times Index was up 0.28% at 4,407 points at 2:15 p.m. Singapore time. And that's with a value turnover of some 959 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in the green, up 0.38% at 4,411 points. In terms of value turnover, that's 1.67 billion Sing dollars. Gainers outnumbered losers, 336 versus 247. Top advances for today, we've got for you SGX, Jardine Cycle and Carriage, and Prudential USD. And top decliners, we have here Shangri-La Hong Kong dollars, New Incorporation USD, and ST Engineering. Well, in terms of counters to watch, we do have UOL as well as Singapore Land, because the companies announced the completion of the 810 million Sing dollar en bloc deal for Thomson View condominium. Elsewhere, from the companies to monitor as the Singapore Grand Prix roars into town to investors' pushback on Tesla CEO Elon Musk's, get this, $1 trillion pay plan. We've got more corporate headlines in focus. And joining me on the line today on a Friday is Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome back.
Hey, Dian, how's it going?
Good. And Ben, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises if we look at the biggest movers?
Well, as you mentioned, the STI was closed up 0.38% today. But the interesting thing was that the mid-cap and small-caps actually fared better than the large caps. So if you look at the mid and small-cap indices, they clocked in between 0.62% and 0.42% up, which was higher than the STI. Some interesting counters. So SGX Group and UMS were both up 2.22 and 2.7% respectively, largely on the back of announced dividends. Franken was up 4.11%. So if just to kind of make sure all on the same page, this company specializes in semiconductor production as well as research. So it was up today quite a fair bit. Probably on the news, probably on the back of positive news from NVIDIA and Intel continuing to power the overall positive sentiment for the broader semiconductor industry. Another interesting one was Thai Beverage, up 3.2% to 48 cents. I think this one is largely on technical factors because this stock has been largely range trading within a very stable price channel for since July. So that's it for some of the interesting picks for today.
Okay, and let's talk a bit about UOL and Singapore Land Group because they announced the completion of 810 million Sing dollar en bloc deal for Thomson View condominium. What do you make of the latest development?
Well, I guess from a business perspective, Thomson View is a very good location. Price paid was pretty reasonable. If you think about it from the broader macro narrative, interest rates are coming down. So, in a couple of years when they start selling the development, it should probably sell well, depending on where we are in the cycle. So, very decent project. If you look at the stock price impact on this news, the stock prices for both companies didn't really move much today. They were like 0.3%. About there. But that said, the prices for both companies were up between 1.3% and 1.5% yesterday. So it could be that the market was already buying on any kind of possible good news yesterday rather than today when the news actually came out.
Okay. And Ben, let's talk about DBS, because DBS Group Holdings blistering share rally this year, it has widened its market value lead over its peer OCBC to a level that's never seen before. Now, some analysts have weighed in on this, but what do you think is the key difference between OCBC and DBS that led to the difference in the share price movements?
Well, I think DBS has got a very good execution track record. So if you remember the second quarter earnings that came out in August, its estimates, its actual earnings actually beat estimates really because of strong performance in lending, trading, as well as asset management businesses. That's especially important because now we are moving, or rather gradually moving, into a lower interest rate environment. So having a very strong fee-based business such as wealth management, asset management, really helps to offset the lower net income margins, net interest income margins from the bank's lending business. Again, from a different angle, DBS has pushed very aggressively into AI. That is paying dividends. So more streamlined operation, realization of cost efficiencies. From DBS's own website, the bank has deployed more than 1,000 AI models across 300 plus use cases. Again, from a different angle, brand is very strong in ASEAN. Bank itself has got good geographical footprint in Greater China. And if you look at the dividend story, it's very compelling. So it's got an estimated dividend yield of about 6%. This is, especially attractive for a big cap stock. And of course, every Tom, Dick, and Harry and his dog has an account with either POSB or DBS, right? So it kind of encourages investors to hold on to the stock for a long time, especially for the more mature investors, because they really love dividend yield. So this is a very potent, attractive mix of traits for the bank. Not the other two banks. It's kind of hard to compete on this basis. So I think the valuation premium over its competitors is justifiable.
Ben, let's talk about the Singapore Grand Prix. It rolls into town this weekend, and the MTI, the Ministry of Trade Industry, had said in 2022 that the race weekend alone brings in about 130 million Sing dollars annually in terms of net spend. So what are some of the companies linked to the race that you're keeping your eyes on? I know some of the companies include SIA, Grab, ComfortDelGro. Some brought in LVMH, Trip.com. What are you watching?
Well, all those companies, actually, yes, specifically. So broadly, the hotel and tourism-related stocks will benefit. So this is kind of a nice spike in the hospitality sector. Again, there's a little bit of bifurcation. So the luxury and premium hotels tend to see a bigger spike in their RevPAR, that's revenue per available room during the race weekend, and this especially so for hotels which are physically situated close to the race circuit. So we're talking about Fullerton, Pan Pac, Marina Bay area, so on and so forth. So all these companies, typically they may report as much as a 100% jump in revenue simply because of F1 and the related events before and after F1, all the parties and so on and so forth. I think the challenge is that this event is it's very cyclical, right? So it's a cyclical annual event for one weekend. It happens across a number of days. It's not something that lasts for the whole year. And this is not without precedent. It's not new. I mean, this is the 16th Singapore night race. And of course, all of us analysts, we have already baked in our increased revenue expectations for the weekend into all our reports. So it's not, it's kind of like business as usual. We already expect it, right? But that's not to take away from the overall narrative that Singapore's tourism recovery has come a long way since COVID. So if you look at the STB estimates, Singapore Tourism Board, they actually estimated that the tourist receipts for 2025 may reach a new high this year for full year, beating pre-COVID levels. Even though the physical tourist visitorship might be less, but the dollar amount that they spend could actually be a historical high. So the whole takeaway is that I think F1 is a marquee event, but I don't think that alone is driving Singapore's tourism recovery.
And I bet I might have asked you this question last year, given how we always talk on the air on Fridays. Are you going to watch the race?
Definitely, at least the tail end. I mean, so it's like it's very long, and of course it's very monotonous as it goes around in circles. But usually, at the tail end, some action will happen. So yes, definitely going to catch that.
Okay, now if you're just tuning in, we're now in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, Ben, let's stay in Singapore. Somewhat related to the previous question. Let's talk about retail sales in general. So in August, retail sales in Singapore went up by 5.2% on a yearly basis, picking up from July's revised 4.6% expansion. That is as majority of the industry's marked increases. Now, how far were the numbers in line with your expectations? What clues could we get on the outlook of SGX-listed retailers?
Well, as you mentioned just now, the headline number beat consensus estimate of 4.8%. Again, as you mentioned, seasonally adjusted, it was up 0.5%, including motor vehicles. Excluding motor vehicles was 1.3%. So all those are nice numbers. If we look a little bit deeper into the different sectors, it paints a slightly more nuanced picture. So let's take the food sectors, right? You've got the sales of food caterers, fast food outlets. That was up about 4.8%. So that was very nice. Sales for cafes, food court were about flat. Restaurants were down 3.2%. So all these suggest that when it comes to food options, Singapore is tightening its belt a little bit. So more McDonald's, less Teng Lok and Hai Di Lao. If you look at department stores, they led the decline in sales of about 6.5%. But talking about specific products, you've got furniture, household equipment, watches, jewelry, PCs, computers, telco equipment, mobile phones, and so on. That was up about between 7 to 11% year on year. I think the winners and losers were kind of largely driven by the discounts that we got in those product categories for the National Day 8/8 sales as well as the Great Singapore Sale. Because after conversation with my in-house expert, i.e. my wife, really, there were tons of sales and discounts for those product categories. So yes, it's showing up in the numbers. So, no surprises there. Again, zooming out, if you look at the whole narrative on the Singapore retail sector, as usual, Singapore retailers are facing continued concerns over, obviously, rising labor costs, global economic uncertainties. I think the sector as a whole remains challenging.
Okay. Now, further away, talk about challenges. This sector, the semiconductor sector, also seeing some challenges there. Applied Materials, for one thing, the maker of machinery used to make semiconductors, said that an expansion of rules that restrict the export of its products to China will take another chunk out of its revenue. How concerned are you about this, and really what does it mean for investors?
Quite concerned actually. So the company has guided that with the new rules in place, it expects to lose USD about $110 million in fiscal fourth quarter, and a total of USD $600 million in fiscal year 2026. So once the news came out and the company provided its guidance, the stock price was down about slightly more than 3% in aftermarket trading session. So now the consensus target price is about 9% below its current price, and that's even after taking into account the aftermarket selling. So, we could see renewed selling in tonight's full trading session in the U.S. If we zoom out, the export restrictions tend to lead to disruptions in the global supply chain. So again, yet another data point to the growing concern that the current bull run in the U.S. stock market, which is really driven by the AI mania and adjacent industries such as semicon manufacturing, may be close to running its course. So it could be a good time to start thinking about allocating to defensives. And by the way, gold prices are up again. So that's a traditional defensive. Could be a good idea to kind of allocate some of the portfolio to that product.
I see. And finally, before I let you go, Ben, we must talk about Elon Musk and Tesla, because a group of these Tesla shareholders, including SOC Investment Group and several state officials, they urge investors to vote against Elon Musk's $1 trillion USD pay package at the company's November meeting. Any thoughts on that? And what are the implications that this would have on Tesla's share price?
Well, the idea behind the US $1 trillion pay package is really to tie Elon Musk to Tesla to sufficiently incentivize him to put his full attention back on Tesla rather than playing politics and doing what else he does in his free time, right? But Tesla is in the EV automobile industry. So again, there are much broader narratives driving the EV industry. So China is now a very significant EV player. Tesla had a first mover advantage in the beginning, but China's EVs are evolving much faster than Tesla. So again, you take the Model Y that was launched this year. It was supposed to be the kind of a holy grail, the Empire Strikes Back against BYD. That didn't happen. If you look at BYD's current offerings, they're on the roads in Singapore. They are, sexy actually. They've got good tech. They drive well, and of course, China EVs have got a significant cost advantage. Again, if you look at the supply chain, China also dominates the EV battery production. So regardless of Elon Musk's, gigawatt battery factory in Texas, you can't compete against China, right? And again, if you look at kind of the things like the software and AI, China is getting better all the time. So it's a very hard combination to beat. So whether it's China or whether some other EV manufacturer, Elon Musk has got his hands full. So whether he's fully committed to Tesla or not, regardless of the pay package, I think this is going to be quite challenging. Again, looking at the research reports, the consensus target price for Tesla is actually about 23% below the current stock price. And the consensus recommendation is a solid hold. And so if there is a price correction for Tesla's stock, it's definitely not going to be pretty.
Okay, I have about 40 seconds to go, so a very quick one, Ben. So what are the levels to watch for Tesla in your opinion?
Well, 23% down is probably about 300-ish. But there are a couple of intermediate levels below that. So obviously, if any stock price which is down by 10%, that's already a red flag. So it's bursting below that is probably going to be a downward spiral. So it can happen very fast depending on the market sentiment.
I see. Thanks so much for the insights today, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.